Hi friends, hope you are keeping safe in this pandemic, and of course our government wants to keep us busy as well. So now there is a new section in income tax, which is one of the hottest topic for discussion for the experts as well as the businesses to comply with. So we all know about new TDS provision, which has been introduced from 1st of July 2021, and it asks you to deduct TDS on the double rate for certain specified persons. I'll talk about that. My name is Sriyesh Ammi Prabhakar, and I'm going to give you all the facts we know till date. So all the information we have till now. This is the analysis of the sections. Whatever we know about it. So we'll talk about when it is applicable, on whom it is applicable, how should you check whether your deductees are complied or not complied, as well as what if you are not able to check, what should you do for indemnify your liabilities, or you should take any declaration, or you should take any letter from your vendors or your deductees, or how should you deal with it, as well as how it changes with the time as well. So we will talk about everything we know about this section till now, all the facts. There are a lot of assumptions people are taking. We're not going into those assumptions as of now. It's more of fact gathering, and of course wherever you have room for assumptions, you have to take it. This is your specialized nature of the business and your own conditions, but this information should be enough to at least implement the section for the very first time, implement this provision for the very first time in your business, and to make sure that you are not non-compliant for deducting a lower TDS on your deductees. This section is already applicable now. It's applicable from 1st of July 2021 this year. First of all, we'll look at the applicability. So it's for this year 21-22 for the very first time. It's applicable on a person who has not filed ITR for 2 previous financial years. So this is the key criteria to find out a person on whom the TDS rate will be higher. So your deductee, the person for whom you are deducting the TDS, if that person has not filed their ITR for 2 consecutively previous financial years for which due date is gone, and the aggregate of TDS is 50,000 or more in both financial years separately. So each of the financial year, the TDS deduction amount should be more than 50,000. So if these 2 criteria are met, a person is a specified person as per this particular section. That person fulfills the criteria of being called as a specified person. Yeah, and of course there are some exemptions. We'll talk about it. Some of the incomes will not be covered in that. Some of the payments will not be covered in this particular section. Some of the type of people will be exempted for it, but that's a very specific one. We'll discuss it later. So what if a person is a specified person? So the TDS applicability rate, if a person has not filed the return, if we are sitting in, for example, 21-22, so for this particular year, the applicable year for assessment when the person has filed ITR or not is previous year of 2018-19 and 19-20, because 2021 returns has yet to be filed, so we cannot call somebody a defaulter since they cannot file the return as of now. So if a person has not filed the return for 2018-19 and 19-20, and in both the years their TDS amount was more than 50,000. In such case, the applicable TDS rate for this ongoing year 21-22 will be higher of twice the rate given in the provision, so whatever is there in the section, or twice the rate in force. So if there are certain changes for short period or by any other changes by the government, if that is the applicable rate as of now, or 5%, so whichever is higher. So minimum rate at least you are going to charge is 5% by this rule. Otherwise it might go up to 40%, in some criteria, and even beyond. So it depends on what nature of payment you are making and what type of person that is. So again, if we look at this section, it's very new in itself, and it's very much focused on getting people complied with the returns, with the filing of the returns in time. And so we'll move on to the next part of this, wherein there are certain exempted persons who are not to be covered in this particular specified person definition. That person is a non-resident if a non-resident doesn't have a PE, that means he doesn't have a permanent establishment to work in India to carry on his operations in India. He doesn't have any offices here. He doesn't have any establishment here, partly or fully. That is the explanation given for that particular PE here for this section. Now, certain type of payments are exempted as well. We'll look at it. So the payments primarily are exempted, which are related to the employees. So you have a salary payment, or you have other employees related payment, aggregate payments, whatever comes under 192 and 192A are not to be considered for higher rate of TDS. That's well, as per the logic as well. Then any payment you are making under section 194B and 194BB, that is TDS on winning from lotteries or puzzles or horse racing. Of course, the normal TDS itself in most of these cases comes at 30%, and if you make it double, then it doesn't make a sense. So that could be one of the rationale for keeping this out of such a specific provision. Then the last one is under section 194 LBC, where TDS on income in securitization trusts, investments, and any payments made under section 194N. So these are the only exempted payments as per this section. If any other payments you are making, you have to check. This is very new requirement. I'm repeating again. You have to check this for all your vendors, for all the payments you are making for your company, and find out who are the people who gets covered under the specified persons as per this particular section. At once, you don't need to repeat it every month or something, but at once you have to do this detailed exercise to find out what should be the applicable rate of TDS on all the deductees you have. Now we'll look at a couple of additional points here. If a person who was non-compliant, who was coming under a specified person definitions earlier, but for 2021, for which return has yet to be filed, his TDS is less than 50,000. That simply means it gives him exemption from the rules, and then that person will not be considered for higher deduction. Similarly, if a person files a belated return or revised return, even now, if it's allowed by the law, the double TDS provision shall not be applicable once he gives you the proof that he has filed the return. So not without having the proof, nothing verbal. Now we'll talk about how to find out if your deductee is compliant or non-compliant, or you can't go to everyone and check, and you can't ask them and you can't believe them whatever they say. So government had come up already with a mechanism on their reporting portal of the income tax, where you can key in the PAN number of your deductee. It could be one individual PAN, or it could be bulk, list of PANs you can put in there. If it's single PAN, you can see it even on the screen, and you can download the PDF format as well for your records for documentation purpose. If it's multiple PAN number you are feeding there, then you have to download the PDF with their particular status, and that you can document for records, for supporting your facts that why you are deducting a double TDS or normal TDS on your pays, on your deductees. Similarly, there is a practice of taking a declaration from all your deductees, wherein you ask them to declare whether they have filed their ITR or not. That's not mandated by the law anywhere, but of course it's one of the best practice by industry. So you should be doing it if it's practically feasible for you. For some companies it's not feasible, but yeah, if it is feasible, you should be doing it additionally to keep your things indemnified. So if you have a declaration already where your deductees declare that they have filed the returns in time. And then another thing which I already mentioned, that you don't need to keep checking the status of your deductees, whether they have filed the returns or they have not filed the returns. If you have done it once in beginning of your financial year, it's not going to change. So you can just keep deducting the TDS on the same rate for rest of the year. So that's the brief about the section. It talks about. If you have any doubts, if you have any queries, we are happy to discuss in the comment box. Thank you for your time, and don't forget to subscribe our channel. So once again, I would request you to subscribe to our channel and share this video with your friends if you find it valuable.